Good afternoon, this is Sean Golding with Golding & Golding, here to discuss the basics of whether expats have to file the FBAR. If you've only got a few seconds, the answer is yes. But if you have a few more minutes, we can go through the basics of it together. So what's an expat, right? An expat is a U.S. person who resides outside of the United States the majority of the time, not to be confused with an expatriate. An expatriate is either a U.S. citizen or long-term lawful permanent resident, 8 of the last 15-year test, who has formally either relinquished their permanent resident status, given up their green card, normally filing an I-407, or if they're a U.S. citizen, went down to the local embassy consulate, filled out the necessary Department of State paperwork, and have formally renounced their U.S. citizenship. In those scenarios, the person is no longer a U.S. person, and therefore they don't have to file an FBAR unless maybe they have a U.S. corporation that has foreign accounts. So baseline perspective. Formerly expatriate, lose your U.S. status, may not have to file FBAR. If you're an expat, you just reside outside of the United States, then yeah, you still have an FBAR filing requirement. You also have to, report your worldwide income on your U.S. tax return each year. A lot of expats don't know that. It can get super confusing. The IRS does not make it easy. We got other presentations to help you with that. Basics of FBAR reporting. The FBAR, Foreign Bank and Financial Account Reporting, technically it's referred to as FinCEN, Financial Crimes Enforcement Network, Form 114. Don't let the fearmongers get at you. It's rarely ever a criminal enforcement situation. 99% of the time, any violation is going to be civil, and most of the time it's going to be non-willful. So you're an expat, you reside outside of the United States, you have foreign bank and financial accounts. What's reportable, right? Well, bank accounts such as savings accounts, current account, checking account, term deposits, fixed deposits, all that good stuff, that's reportable. But there's a lot more that goes into it, right? It's not just bank accounts, it's bank and financial accounts. So that can include your investment accounts. You may have a stock account. This also gets a little confusing because a stock certificate that you have at your home doesn't go on the FBAR, but a stock account like an Ameritrade or something like that, that's reportable. Your investment account, Vanguard, things of that nature, that's reportable. Essentially any type of account, mutual fund account, foreign life insurance policies, if it has a surrender value, foreign pension plans. There's some content online that pension plans aren't reportable, and what they mean by that is if you had like an IRA in the US and that IRA had foreign accounts, well, you don't have to parse out the foreign accounts of a US pension plan, for example, but if you have a foreign pension plan, a superannuation, a CPF, an MPF, an EPF, SIPs, ISAs, things like that, those are all reportable. Cryptocurrency, maybe kind of sort of, if it's in an account sort of situation. There's currently regulations pending. I think it's FinCEN regulation notice 2020-2. They're essentially trying to make cryptocurrency reporting similar to regular reporting for your fiat or other currency outside of the US, so that would presume you would have to include accounts and things like that on the FBAR. If you're out of compliance for prior years, again, don't let the fearmongers get at you, especially if you're overseas. There's various programs. There's voluntary disclosure program if you're willful or just can't certify under penalty of perjury, if you're non-willful. If you're non-willful, you've got the streamlined domestic, which is for U.S. residents or foreign residents who don't meet the foreign residence test. It's a very specific test depending on whether you're a citizen or green card holder versus non-resident who just met substantial presence. If you qualify for streamlined foreign, guess what? There's no penalty. There's no penalty on the tax. There is no penalty on your offshore accounts, investments, assets, things like that. You could typically use the foreign earned income exclusion on salary and other earned income, housing exclusion. You may have foreign tax credits, so at the end of the day, you may not owe anything. And there's also things like reasonable cause and delinquency if you're looking for an alternative or for some reason you don't qualify, like streamlined domestic. Let's say you didn't file original tax returns. Well, you can't typically file original returns under the domestic version of streamlined. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate. We have lots of free information available on our main website and our sub-websites. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.